All right, welcome everyone. We're going to give folks a minute to get situated as the attendees dial in. All right, let's get started. So, first of all, welcome everyone to another installment of a Grotto webinar. We're excited today to actually take a different spin on things. And today we invited two of the smartest people at Grata to talk about what they do behind the scenes, how they think about and build data systems, particularly focusing on private company financial data. As we know, it's a challenging topic. So our objective for today, just to level set, is we want you to come away from this learning something new and learning a little bit more about how to size up and how to get the financial profile of a private company. Some of you may be building in-house systems and building models yourself, and this can help you with that work. Others may be using Grata already and want to be able to explain what's happening behind the scenes in Grata just to better understand how you use the product. Either way, whether you're using Grata today or not, the objective of this is to help you learn a little bit more. So without further ado, I'd like to introduce both of our panelists today. First, Sanjay Menon, and then Edmund Sisambon from our engineering and product teams. Sanjay, I'll give you the mic to introduce yourself and share a little bit more about your background and what you do here at Grata.
Sure, Nevin. I am a staff data scientist here at Grata. I graduated from Harvard College with a degree in mathematics, and I'm also a chartered financial analyst. Before working at Grata, I spent several years running quantitative models in the hedge fund space. At Grata, I'm in charge of company sizing methodologies for both revenues and employee counts. I also apply machine learning to alternative data sets to enhance the platform offering in general.
Thanks. And Ed?
Hey everyone, I'm Edmund. I'm a senior product manager. I graduated from Georgia Tech with a mechanical engineering degree, started my career in management consulting, eventually moved into the startup space, working with data to optimize healthcare operations. Since I've been at Grata for over 3 years now, and I lead all things company data.
Great. Well, appreciate those intros. The style of today's webinar is actually we asked for questions before the webinar, and thanks to our audience, got a number of questions. We're going to try to answer most of them, if not all, depending on the time. And we've actually strung them together in a way that flows through how we think about financial data and the way and the chronology of the way we put together financial data. So I want to start off with the first question, and this one's actually going to be for Sanjay. So, Sanjay, there were a lot of questions asked about really being able to size private companies outside in. And one of, the key pieces of a diligence and understanding if a company is a good target is knowing its size. So, how should one go about and think about how to approach understanding the scale of a business without the financials, without the data room open when they're looking outside in?
Right, and ultimately that's the problem that Edmund and I are always trying to solve here at Grata, where most private companies aren't just going to tell you their sizing or revenue data because they don't have to, unlike a public company. And I'd say the first input to how we think about this is to try to get a sense of how many employees the private company has. Like, I think all of us know that a 5-person company is materially different than a 500-person company. And we use basically whatever information we can find and whatever data we can find to get a tighter and tighter estimate of that employee count. Those sources might include government data, might include professional social networks. There are lots of ways to go about this, but in the end, our first input is to understand just how many employees a firm has.
And Sanjay, I think employee counts have been widely accepted in the M&A industry as the anchor point for sizing. But someone asked, like, why employee counts? Why do we care about this data point so much?
Sure. Um, so I mean, the employee count is a very good start because there's a lot of data out there that's sort of keyed off of employee count, whereby one can sort of extrapolate more from that. like a lot of government data, for example, is based on sort of the per capita idea or the per employee idea. And so we're really trying to start with like both a data point that other people have used to sort of base their major data off of, but then further, employee count is a term that I think everyone understands. I mean, we all work at companies, we all have a feel for when a company is a 20-person company, a 70-person company. It's just a very simple basis where I think all of our users, most people can really get their heads around it.
Yeah, so you're essentially saying size comes from employees, employees is widely accepted, and then that's used by other sources you can triangulate that data with to understand the translation between employees and revenue.
Yeah, that's exactly right. And so to get from employee count to revenue is sort of like that's like the final piece of the puzzle and a very tricky one. And we do our best with that by saying, okay, it's a 50-person company maybe. What is their business model? Like what exactly are they trying to do? Like what kind of industry are they in? Like, and we look at, I mean, we parse a tremendous amount of data on a company to try to figure that out. And that really speaks to a lot of the artificial intelligence we do here at Grata, where we spend, again, a lot of time trying to figure out exactly what they're doing. And we use that information to map to the kind of revenue profile that that 50-person company might have.
Now, we just had a audience question come in, and this is around it was around this nuance of employees. What happens if you have a company that actually doesn't have a lot of FTEs, full-time employees, but they work with a lot of, let's say, independent contractors? The example provided was for transportation companies. Some, their drivers are employees, others, you have owner operators or independent contractors. How does that factor into this type of model?
Sure. And so we've done a fair amount of work in terms of, like, for example, like just looking at a company's LinkedIn, you might have their employees, but you might not know, but that might not be a very good proxy for how many people actually work for that firm. And so in an industry that has a lot of contractors, they one thing we can do and one thing we do is we actually will look at a lot of different estimates of employee counts, maybe professional social networks, maybe elsewhere, but then we actually do apply adjustments to those based on data that we've gotten from many sources to try to figure out, what are the best adjustments we can make. And so for industries that might be like that, including transportation, we do often have, say, a scale up factor saying, okay, we see this number, but based on other data we've gotten in the past on similar firms, we know that the effective number is almost certainly higher. And so to adjust for things of this nature, we have various scale factors based on other data that we've studied.
Interesting. So Sanjay, you would say that if a company is an outlier and they're the only one in the industry that deploys a new business model, that's likely not to be captured as accurately than if this business model is more similar across other companies for which we've already benchmarked. So if the owner operator model in transportation is similar across, a set of similar companies, we're going to size those more accurately. Is that the right way to summarize that?
Yeah, that's exactly right. And so what we're trying to do is come up with a number that on average is right. And for the firms that are within certain variants or certain standard deviations, we're going to have a good estimate. But if a firm happens to be like way outside of those bounds, unless we have some other data point sort of indicating that they may be a firm like that, and we do have other data that might, but to the extent that we're not able to capture that, we're not usually going to be able to capture a firm that's truly one of a kind.
And Sanjay, another question, and we're going to dig more into the employee count, but actually about revenue. An audience member asked, like, where do you get that revenue data? Where does the source of truth data come? Because as you said, private companies, they don't have to report revenue, and it's always wrong. Where does the source of truth come from, and how many observations do you believe we need to accurately estimate revenue?
Hmm. It's a tough question. We look at many sources to try to come up with these benchmarks. We've mentioned that we do use government sources, and there is data out there that we're definitely sort of inclined to use. We also get we also get a tremendous amount of user contribution data from our clients. Like we have, 600 PE and VC firms out there on our platform, and they do, like I believe 25% of them do provide feedback based on things they know and information that they are more aware of that we wouldn't know. And so it's a combination of both publicly available sources, but also by having such sort of an informed user base, we have the ability to basically make modifications and study more and get a level of data that may not be available on the outside.
Really interesting. And Ed, this one's for you, another live question here. I know that you run continuous studies on benchmarking the error rate and the accuracy rate. Can you share a little bit more about how we think about modes of error, especially compared to the next best alternative?
Yeah. So we're constantly looking for whatever revenue data we can find that's we believe to be the truth. And so we try to benchmark that against other providers. And I think that and consistently modes of error are, like Sanjay said, there isn't a lot of data out there for private companies. And so if a company doesn't have much web presence, doesn't have a LinkedIn, et cetera, that's kind of where some of the common modes of error are. If no one knows how big the company is because they don't have a LinkedIn, that's where we kind of have to get a little bit more creative on going to other data sets to be able to triangulate that. And so I think that one of the things that Grata does is we are focused on company data. And so as many sources as we can possibly ingest is kind of our goal. And so we have more inputs, and we believe that in the middle market, especially lower middle market, the other providers just don't have that. They don't have that data to be able to understand what the company does or how big they are.
Yeah, I mean, there are a lot of sites out there, like you can just Google private company revenue and a bunch of sites come up. Tell me more about those because oftentimes I know users will say, well, I saw revenue on Owler or somewhere else. Have you benchmarked to that and what have you seen as some of the differences?
Yeah. So I think again, I think the biggest thing is how much data is out there on the internet. And I think that a lot of those depend on publicly available. That's one of our sources, but as we expanded out to government sources, other sources that we purchase from vendors, things like that, I think that we understand the companies a lot better and we benchmark against that. And we're consistently seeing that, like Sanjay said, we're trying to do our best directionally, and we are consistently directionally better than other competitors and
And
providers.
yeah, do you have an estimate on like the questions around an estimate around the kind of like the error bound or the error rate with those benchmarks relative to other providers?
Yeah. So I think that when other providers are wrong, they could be one more than two standard deviations wrong, according to different benchmarks. And so what we try to do is stay within that bound and understand where are we missing, what are the modes of error. And so at this point, we've refined our estimates over a few years, and we're very likely to get within that one or two standard deviations.
Um, Something else, Ed, that you brought up was around you mentioned like LinkedIn, and that seems to be almost the industry standard now. A lot of users will actually go to LinkedIn and say, "Well, I see a number here. Why is your number different?" Can either one of you talk about like why does this not always work, and what are some of the pitfalls if you just rely on LinkedIn data as your source of truth as a user?
Yeah, I can start this one and then hand it off to Sanjay. But I think uh, the reality is that not everyone's on LinkedIn. Not every company is on LinkedIn, and so that that HVAC repair group down the street, there's a good chance that a lot of their employees aren't there. And so when you're relying on that number that you see on LinkedIn, it's there's a good chance that it's understated. And so I think that as we understand and make adjustments, like Sanjay has said, it's a lot of the pitfalls that you're going to find a lot of understatement, a lot of overstatement based on certain factors about the company, contractors, and things like that. And so we do our best to understand the company and where we can make adjustments. I'm not sure if Sanjay has any more to add to that.
Yeah, no, I mean, I can follow up on that where, like Edmund said, LinkedIn is a good start for sure. And for many companies, it may even be a pretty good proxy for their employee count. But for many companies, it's again a start, but not really an ending. And so for an HVAC firm, for the food service industry, the agriculture industry, many industries just have very, very light LinkedIn presence to the point of not having any LinkedIn presence. And just to give some numbers, we have over 500,000 employee counts for firms that do not have a LinkedIn or at least like any sort of LinkedIn count directly on the platform. And we use a lot of different data sources to get those numbers, whether it's the review data we mentioned, government data, like whatever we can find. And so like LinkedIn, on one hand, we use it as an input for sure, but it's pretty far from the end of our calculation.
How about other proxies that are used? We've talked a lot about headcount, and that's one that people widely accept. But there's this whole industry of alternative data, and our users get pitched about these different data sources helping them size a company's revenue. Can you talk about, what else can go into a model to get revenue and maybe what our users can look at, what they should potentially stay away from, and your perspective on this ecosystem of financial proxies?
I'm sure.
Sure.
Yeah. Oh, go ahead,
No,
Sanjay. Go ahead.
I can start on it, but I
Yeah.
mean, Edmund's always looking at new data sources, and so he'll have a better sense than I will. But I mean, one way for a software firm, web traffic, for example, is one proxy that might give a very good idea in terms of how large or how much business a firm has, and that's something that we do provide in Grata. Like we've cited before, review data all over the internet can be very telling, especially for services businesses, in terms of their sizing. Some data that may be a little less strong, maybe, I mean, like there's a lot of talk about like credit card transaction data, and that's certainly out there, but data like that tends to be pretty incomplete. And so it can give you an idea in terms of what might be going on, but it can be difficult to compare across many companies because you don't necessarily have a great sense of how complete one company's data is versus another. There are other sources out there too, though.
So is it safe to say, Sanjay, that you value data sets that are complete in and of themselves, as opposed to ones that may be harder to find or more expensive to get that are incomplete or sample or panel based?
Yeah, no, that's a safe statement. And we look at everything. I mean, it's like coming up with private company sizing it's unsolvable at some level. And so we're always trying to look for new sources that might give us even more sort of yield. And yeah, the sources that we found the most useful are sort of the most complete ones, as opposed to like the sample panel kind of data, which it can give you an idea for sure, but again, it's difficult to extrapolate. Like we're trying to do this for the 12 million companies in our, on our platform. It tends to be hard for us to do this for all of them with data like that.
And actually, a follow-up to that is many European companies do have publicly disclosed, private companies have publicly disclosed financial data. So are you able to pull that on European countries or your companies that are domiciled in Europe and make that part of the revenue, not even models, but actual values?
Yeah. Like Sanjay said, we're constantly looking at new data sources, and so that is something that we're considering for our roadmap in the near future. So doing a lot of research into different countries, different data sources, government data sources specifically, and trying to, if we can get the exact revenue, then that's honestly ideal. And so we're definitely looking into that piece.
Yeah. And I'll actually add to Ed's answer there, as that's part of our roadmap. Oftentimes this question comes up, hey, European, there's got to be revenue, UK companies, house, etc. When you really peel back the onion, you start to realize there are reporting thresholds. If you're over 10 million pounds, for example, you don't have to report. That threshold has changed throughout the years. There's also, it's on a fiscal year basis. So you may have a company that reported 10 months ago and they're growing, and that revenue, even reported revenue, is out of date. So there's no end all be all, even when you have a reported revenue, because of how dynamic companies are. So as we think about this, especially from a Grata sense, it's how do we get you the revenue directionally right? And then how do we ensure that that is up to date as we sense more changes about a company from the reported period? Um, so switching gears a little bit, Ed, this one's for you. Talk to us about other financial data. We talked a lot about revenue and spent really the first 20 minutes diving into revenue, but I think financial data can mean more than just revenue. Tell us a bit more about what financial data you could get on private companies, what's kind of out there.
Yeah, like you said, revenue is just one data point in one dimension. I think it's all about the context of the market that the company sits in. And so, one example of this in Grata is transaction level data. This can be really revealing about a company. So, looking at how much they've raised, how quickly they raised after their last round, their deal dynamics, meaning how big or how fast were they growing when they raised, who are their investors. A lot of that data can be really informative about the company's financial health, what the potential valuation might be, and things like that. And so another dimension related to that valuation is really leveraging our AI models to get and find comparables, and so or comps. And so what I mean by that is finding public companies that are really similar to that company. And with that, you can benchmark the multiples, the margin against really similar companies already being publicly traded that might be more mature. And another thing is M&A comps. And so looking at other companies that have been acquired, how much they got acquired for, and even multiples around that. And so just having a full dimensionalized, contextualized understanding of the market can really inform a company's financials just beyond that number.
And Ed, would you say that concept of company similarity is actually pretty analogous to what Sanjay talked about in the way revenues are estimated, except you're describing it in a transaction sense?
Yeah, it boils down to what the company does, what their business model is, and how much we actually understand how they operate. And so if you have that, then you can, at the end of the day, companies, industries are nuanced. And so if you know that, then you can make a better estimate on the revenue. If you know that, and you can find similar companies, you can understand, okay, how does this company sit in the market and compared to different benchmarks?
Yeah. So Ed, I'll give you a little bit of a hardball one. So someone asked, there are other companies out there that claim to have this. PitchBook says this all over their website. I see this about Capital IQ and S&P, even Crunchbase. They talk about their financial data. What's different in Grata?
Yeah, we've touched on this a little bit through each question and each answer. But each provider is really specialized in something different. And so PitchBook, Crunchbase, CB Insights, they're really focused in the fundraising space, funding that companies have received. And so at the end of the day, I mentioned earlier that Grata, we're really just focused on company data. And so when we have really good company data and a lot of it, you can understand the nuances of the company, have a bunch of different sources, and then also just be able to scale that across millions of companies, whereas their scope is a little bit more limited to 100,000, 200,000 companies. And so with Grata, I think that we just have more inputs into our AI models. We have more inputs, and we also have over 600 investors who are using the platform. They speak to companies every day about what their revenue is. And so they've helped us refine the models over the years and also really build confidence in them.
So you would say that transaction data is a sliver you can get deep on, and that's an input into the Grata system for contextualizing companies at a broader scale.
Yeah, exactly. And I think it's using that sliver, seeing how that sliver can be applied to a bunch of different companies. And so not only breadth, but also depth.
Great. So we're just coming up on time here. I want to see if we have time for potentially one more question. So one more question I was asked, and we see a trend right now of there are certain investment firms starting and investment banks as well, and some corporates starting to hire in-house engineers, data scientists, starting to work on some of these problems firsthand. If you could give them like one piece of advice, I know they're trying to crack some of the same problems as you. What piece of advice would you have for these, especially if you've just joined a firm and you're working with a lot of different data sets that you have access to, plus your internal data? Where would you point the teams to look first, and what piece of advice would you give them for traps they should be careful of?
Hmm. No, it's an interesting question because like I said, we're so wary of putting like wrong information in the platform. And that's something that we're always thinking about. I guess as opposed to a trap, I guess the one piece of advice I would give, and this is easier said than done, but it really is the way that we think about things, is that you get one data point, it is what it is. There are a lot of ways that said data point can be wrong, but if you get multiple data points that seem to echo something similar, then that becomes a very high confidence data point. And so, especially if those data sources are uncorrelated. And so, the more sort of uncorrelated data sources you can find, the more accurate our estimates can be. And that's really something that we try very hard to do.
Yeah, and just to chime in a little bit, I would suggest finding data that your firm has that no one else has. I think that's a huge edge over the market because everyone's trying to look for whatever is publicly available. But if you have data that's not publicly available and that you're pretty confident only you have, that can be a huge input into being able to do this well. And so that can be really just an evaluation of building your edge versus just buying generic revenue estimates.
Yeah, it's a really good point. People, like private company CEOs, they're not taking calls from everyone, right? They're taking calls from you as a corporate acquirer, as a private equity firm, the growth equity firm, the investment bank. So you have differentiated access to companies and therefore differentiated information. So being able to combine that with what's out there is actually what your edge is going to be. So I'd echo that, and think about how you can take what you have and really build on top of that, but look to other providers to help triangulate and at least give you a starting point. Excellent. So we're just about out of time. Again, Ed, Sanjay, really appreciate you joining us on the webinar today and going a little bit under the hood behind the data. We will share the recording and your contact information with the folks on who attended today, and feel free to reach out to us directly if you have any questions or you just want to talk data. All right. Thank you, everyone. And thanks, Ed and Sanjay.